Bloomberg Audio Studios. Podcasts, radio, news. You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
Tons of earnings coming out here. A lot of tech stuff, a lot of user economy stuff. I'm looking at Airbnb, Instacart, all kinds of stuff. Mandeep Singh, he covers all the tech industry for Bloomberg Intelligence. He's got the team which he manages all around the world for Bloomberg Intelligence. Mandeep, let's start with Airbnb. I've seen the stock trading up here. They had some pretty good numbers. I was kind of surprised. Their double-digit revenue growth in 2026. What's the story there?
Yeah, I think anytime you have a big event coming up, which in this case, it's the FIFA World Cup in the summer.
Good point.
That's always good news for Airbnb, and that's what you're seeing. I think, expectations were low, but clearly they're seeing some lift from big events as well as the reserve now, pay later, which is another way to stimulate demand. But overall, supply growth seems to be improving, and they want to expand into hotels and other areas. It may compress their take rates a little bit, but there is no doubt that they want to expand the footprint of what they have to offer on the platform.
They've also, thanks to a lot of marketing, made clear that they want to expand into services as well for guests who are staying at Airbnb venues wherever they go. How much is that a meaningful contributor to revenue?
No, not yet. I think all of that hotel services, experiences is still less than 5% and dilutive to margins. But look, the UI for these companies may change because of AI. So one of the things that they got asked on the call is how are they preparing for that UI change? And I think the moat over the years for all of the marketplaces has been get bigger in size and have more frequency with the users, and that's why experiences and hotels is just their way of engaging more with their daily active users.
Mandeep, how's the market share kind of shaking out here in the world of hospitality in terms of the Airbnbs of the world versus the traditional hotel motel here? What's the market share? What's the split? And are we still seeing movement there?
Yeah, I mean, all of these big three OTAs, Booking, Expedia, and Airbnb, they do the majority of the booked room nights. When you think about the global scale, these are the three scale players. The difference is in the profitability. Airbnb is a lot more profitable than, let's say, Expedia, which is why you see that kind of stock reaction today. And I think what Airbnb has done well is really added more fragmented supply. So the more fragmented the supply, the harder it is to disrupt. Even if you get a new UI tomorrow because of all the AI innovation, how do you add the supply? The host that Airbnb has added over the years, it's very hard to kind of disrupt that moat because that supply part is the hardest part when it comes to marketplaces.
I'm kind of surprised that Airbnb is now offering rooms at boutique hotels in New York, LA, Madrid, and San Francisco. Like that feels like it's going into the market that it intended to disrupt, and the hotel companies are teaming up with it. How did that come about, and does this become a bigger part of its business?
I wouldn't say it will become a bigger part, but those smaller independent boutique hotels were looking for additional distribution. And Airbnb as a platform obviously has a lot of direct traffic. So I think it made sense for Airbnb to boost their supply because they are sort of plateauing out when it comes to the vacation rentals, especially in developed markets. And so from that perspective, supply growth is very essential for a marketplace, and adding independent boutique hotels does add to, that supply. And overall, if it helps them boost frequency and engagement on the platform, I think that's what they're looking for here.
All right. Well, we got you, Mandeep. Pinterest, stock's down 21%. What is going on there?
I mean, that's when Meta, when they guided to 30% top line growth in the first quarter, it had to be at the expense of, the smaller companies. And we saw Reddit do well, but clearly Snap, Pinterest, these guys are exposed to the same advertisers as Meta is. And last night, Pinterest called out, tariffs being one of the reasons for advertisers pulling back on their platform. But retailers, clearly are spending a lot more on Meta. Even though Meta is the scale player, these companies are not getting the advertising dollars at the scale that Meta is getting. And that's why you're seeing that slowdown in growth.
Does AI save the day? Pinterest says it's launched Pinterest Assistant. Its first, and of course this is marketing jargon, first AI-powered visual-first collaborator for online shopping.
I mean, the problem is, no matter what you do, you are competing with a scale player like Meta, which is allocating $135 billion in CapEx this year, building their infrastructure, using that for AI. And that's where I think competition is very tough for all the smaller players on the ad side.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right, let's shift gears and talk a little bit about what's been happening in tech land. Software companies have had a rough couple of weeks, to be honest.
Yes.
It hasn't been limited to this week. Anurag Rana is our Bloomberg Intelligence technology analyst. And Anurag, talk to us a little bit here about how management is dealing with the AI scare that's just, taking every part of the economy by storm. It's kind of rolling through different sectors, and everyone seems to need to be able to answer for how they're going to survive the onslaught of AI.
And this kind of scare is very different than anything we have seen in the past because, in the previous downturns or whenever we saw a big sell-off, the question was the near-term demand is an issue or there's some balance sheet issue with someone. In this particular case, the case is that there is no need for software a few years from now. Not today or tomorrow, but a few years from now. So what that does is when you're doing discounted cash flow analysis, the terminal value of that particular company or a stock, they're saying is going to be close to zero. And that's an argument it's so difficult to deal with because that event hasn't happened. It's all you could say, a thesis of a particular group of investors that they're saying that there is no need for a lot of these companies that depend on the intellectual capital of software developers, people who are using it, and we could all do this in-house. And I think that's the big fear everybody's grappling with. And every time you see somebody say, well, this particular software can go out and do something in the legal world, all the stocks that are part of the data network or the software that sells it would, sell off. So it's really a big dilemma for even management teams as to what to even do right now.
Yeah, I guess would be frustrating for investors in some of these software names is like AI. We don't even know what AI is going to be and what the use cases are going to be. So I think what's happening is people are just spitting out the worst case scenarios that, and that's what I'm seeing in some of these stocks that are off 30, 40%. And these are real companies with real earnings. Is this just something that plays out over time, or how do you think this trades?
The fear of the terminal value going to zero, you cannot undo it in the next few months. It's going to take honestly, years to play out. What you have to figure out is, do you have a framework under which you are thinking about, what kind of companies are better protected than the others? So, for example, one could argue that cybersecurity companies have a better presence there. Second place that we are arguing is companies that sell into really large enterprises that have domain expertise, companies that are critical to you running your daily operation, your P&L, your human resources. Those are the ones that are a far more sticky product than the point product companies that are selling into the smaller or the medium-sized enterprise. But who knows? Maybe that theory goes out of the water as well. So I think you have to have some framework under which you are, gauging these companies, not so much anymore by the financials, but by the business model and where the impact could be.
Domain expertise, that's a term that I've heard pop up over and over again. Anurag, what does that mean in the context of software companies?
So think about it this way. We, when there is an issue that we have internally while we are working, we put in a ticket to get our HR system fixed or our computer fixed. That falls into a realm of a thing called IT services management. There's a company called ServiceNow that has 40% market share in that area. You look at somebody like an SAP, they pretty much control the finance and accounting software that's out there. You look at a company like Workday, they control the HR software market or the HR systems people use. That's the kind of domain expertise I'm talking about, because that's something only these guys do, and they do it very well for larger companies. And there are smaller companies that target the lower end of the market, but these are the ones that they'll deal with it. I'll tell you another one, Shopify, for example. Shopify is something that does digital commerce better than any company out there. And they probably have 1/3 of the overall market right now. And they're growing at 25, 30%. But guess when they reported, didn't matter. Stock still went down after that.
This, if you're an investor with high level of conviction, this is a once in a career type opportunity, potentially. Do you talk to some, I'm not going to call it smart money, but do you talk to some people that have some experience that are saying, this is it, I'm backing it up, I'm loading up on some of these names where I feel I have a high level of conviction in their cash flows? Are you hearing any of that yet?
Yeah, I haven't had that many incoming inquiries to talk about software stock in many years because they were very expensive at that time. I think if you go out and read the article, the Amazon AWS, the head, he comes out and says, this is just overblown at this point. So you have like somebody like Amazon Web Services CEO talking about it in the market. So, there is, and then on the other side, there is an argument that, all these jobs would be automated in the next 2 years or so. So it is these two fears. And we all know when you have a fear in the market, people shoot first and they think later. And that's kind of the dilemma, or that's kind of the market where we are right now.
Has that fear dissipated a little bit as we gotten towards the end of the week, or is it still just as intense as it was a few weeks ago, Anurag?
I think it gets worse every week. I mean, I started looking at this, the second half of last year. And every time I would talk about it and know this is, that is just too overblown and this doesn't make sense. Next week you come in, everything is down 5 to 7% again. I mean, as in total, there are certain companies, as I said, look at Shopify. They blew out their quarter, grew 30%. Next quarter consensus was 25%. They said next quarter they're going to do 30%, and they have a massive agentic, you could say, strategy that nobody else has. Stock was down both times. I mean, it didn't matter. Yep. So it's very difficult to, put rational thoughts at that point.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts, or watch us live on YouTube.
We went to go to Ireland. We asked this kid who's is a tech geek, hey, we're thinking about going to Ireland. He asked us a couple of questions. 15 minutes later, he comes back with a full itinerary that he got off of ChatGPT. I said, oh boy, what does this mean for the travel agents, the OTAs? Not good. Nicole D'Souza joins us. She's an internet and software equity analyst for Bloomberg Intelligence. I'm thinking about the Expedias of the world, Nicole, all those types of things. What's going on with that business? Is that going to be one of those businesses that's really disrupted with AI?
Yeah, so I think you bring up a great point. Now travelers, instead of going to Booking, Expedia, TripAdvisor, they're just working with ChatGPT. So they don't even really have to see the back end. So they are looking at, not just now planning on an AI product, but they're also potentially going to be booking through an AI product. So they will ask ChatGPT, this is where I want to go. This is what I want to see, what I want to do. It'll give them an itinerary, and then it'll work with the supply partners directly to book everything.
Wow. Because, again, this kid came back with an agenda. He's 28 years old. Came back with an agenda that was, this is where you're staying. This is where you're going to eat. Cars booked. We're going to get a car. Here's your flights, recommended flights, blah, blah, blah.
Yep.
And then the next step would be booking it.
Yes.
Wow.
Yes.
All right. So if I'm the Expedias of the world, what am I doing here?
So they are rolling out their own AI products. It's a little too early to tell if they'll really be able to compete with something like ChatGPT. Expedia has like a really interesting product where you can take social media, like a reel from Instagram, put it into Expedia's AI product, and it'll create an itinerary based off of what you're seeing on Instagram. So it's kind of like you go from just having inspiration for a potential trip, and then it gives you the exact flights, hotels, everything.
Expedia just reported some results. How were they?
They were actually pretty solid. So The real overhang on Expedia for the last year has been the U.S. travel market, which has been pretty stagnant. That has been recovering. Expedia is primarily exposed to the U.S. market. They don't have as big of a global presence as Booking.com. And Expedia's results were pretty solid, strong execution, pointing to a recovering U.S. travel market. So we were pretty pleased just with their execution over the last quarter.
When I look at Expedia, TripAdvisor, bookings, are they kind of the same, totally the same, or are they differentiated?
So Trip, I would say, is differentiated. They've actually changed their platform a lot in the last few quarters. They are now focusing on becoming an experiences booking platform. So if you are looking to book, a cooking class or a wine tasting or a walking tour, you can book that directly on Trip platform. So a little bit different than kind of what Booking Expedia do with hotels and flights.
How's that industry? What's the percentage now that people book through these OTAs versus going to Marriott.com or something like that?
So we have definitely seen, an increase in direct bookings. It's actually hotel partners now are incentivized to maybe work directly with AI partners instead of Booking and Expedia, because if they go direct, if they have a direct booking, they don't have to pay that 15 to 20% commission to OTAs.
Oh, so there's another. Yes. So the technology, AI, ChatGPT, whatever you're using, that actually works in favor of the actual hotel,
exactly,
the airline, and all that type of stuff.
Yes. So they now don't need the visibility per se on Booking Expedia.
Yeah, that sounds scary to me. Yeah. So as I look at the year-to-date stock price performance, Expedia down 25%, Trip down 32%, Booking down 22%.
Yes.
The market's definitely telling you that they're concerned.
Right.
Is there a less bear case than that? Because, right now we're in an environment where people are throwing everything out the window, software related.
Yes.
Because you don't know where AI is going to go.
Right.
But here's an example. Where you can see it.
Yes. And I think, we are definitely very early in these AI products. So even the bookings product, we've seen examples from Google and from ChatGPT, but they're not necessarily in a place yet where they're going to have a real impact on revenue, at least in maybe the next 6 to 12 months. And I do think we are seeing, an uptick in the overall travel market. So U.S. travel has been improving. We have things like the Winter Olympics, the World Cup later this year, which are going to kind of boost travel. So I think there is kind of a case for at least short-term growth, but there is, the AI overhang still.
So is Airbnb, are they seeing like World Cup stuff? Like I can rent out my New Jersey home for World Cup for the finals?
Yeah, I do think the World Cup, especially for U.S. travel, will have a pretty significant impact. I think we're going to look at, Expedia is probably the most exposed to the U.S. travel market. So if we keep seeing solid execution from them, we could have a strong couple of quarters.
Stay with us. More from Bloomberg Intelligence coming up after this.
You're listening to the Bloomberg Intelligence Podcast. Catch us live weekdays at 10 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
All right. One of my favorite groups on Facebook is the Amex Platinum Card Benefits and Offers group. It's a private group. It's got about 71,000 members, but everyone exchanges tips on how to get the most out of their Amex Platinum card.
Really?
Yes.
So you're one of those people that's really into it.
I started to become really into it because I didn't like the refresh on the Chase Sapphire card, so I wanted to find out the other options.
What's the refresh mean?
They raise the rate, the annual fee, and then they change the benefits.
Okay.
And so then you have to do a deep dive.
See, I know my daughter and her friends, they are all into maximizing the points. And
so she knows.
She travels all over the world and she's like Charlie Pellet, doesn't pay for anything.
Oh, Charlie Pellet is like the master guy when it comes to these reward points. Okay, let's bring in Edward Najarian. He is a Bloomberg Intelligence industry analyst who covers consumer finance. And his team has just written a report on the Platinum card and the fee economics there. Edward, tell us a little bit more about what you learned, because 2026 was the start of Amex rolling out its increased fee for the Platinum card. And we're starting to get some understanding of what it might look like.
Right. So, when they reported the quarter, great quarter. Everything kind of in line with expectations, or in some areas better, and gave great guidance in terms of mid-teens EPS growth for 2026. And a lot of conversation about the refresh and how great the refresh is going and acquiring lots of new customers. But generally, there were two things that sort of analysts picked on in the quarter when you're trading at sort of a high multiple for financial, and those two things were number one, that the new card acquisition rate kind of went down a little bit relative to last year and relative to the third quarter. And additionally, all the money that they're spending on rewards and services and all of what they call variable customer engagement expenses went up a lot, a little too much in some people's opinions. So what we kind of learned recently was sort of some supporting data around two things. And the big thing was, while the number of new cards acquired went down a little bit, the fee per new card went up from 196 in the third quarter to 282.
What?
Now, so huge jump. Now, why is that? That's because a lot of the much bigger percentage of those new cards came from new platinum customers, which is much better than just a regular customer. So even though a little less customers acquired, you're getting many more new platinum customers, much better economics. So that's sort of one thing. And then talked a lot about how they're absorbing all of those extra reward costs, if you will, but still that's fine because it's enhancing revenue growth, and sort of the revenue growth benefit of that offsets the reward cost, more than offsets that reward cost.
Okay, Edward, one thing that I've noticed from these Facebook groups is that people get a platinum card that's, for the sign-up bonus and everything else, but then they start branching out and they get the gold card because there's more reward points for groceries there. They start to compile a lot of Amex cards. So a lot of the users have multiple cards, don't they?
Yeah, no question about that, and obviously you've got a lot of sort of families on the platinum card. So there's sort of a primary platinum card owner and then issuer of multiple cards related to that. So you sort of have this sort of network effect of the platinum card that just keeps building. And to some extent, if you can. When you come back to the JP Morgan Sapphire card, if you can, build that reward and service infrastructure even bigger and better, you create the, sort of the mode effect, which is what they're trying to do and seems to be working.
Hey, Ed, I have the green card I got the day I graduated college. I've kept it all. But Scarlet and other folks, I understand, they go crazy for these really expensive cards and all the points and managing that.
You need to go platinum, Paul.
No, I just can't. I can't do it. But how big of a business is that for these card companies? Is that really the value driver, the Scarlet Foods of the world?
That's it. Yeah. They care much more about Scarlet than they care about you, I have to say. Yes.
That's why you need to upgrade.
She's about to pay $895 a year, up from $695 a year. They're going to give her a heck of a lot of rewards and services for that. But
got a big sign-up bonus.
On average, now I hope this is not completely true, but on average, she, one of the platinum card members, spends about 10 times as much on her card as you do.
This is the Bloomberg Intelligence Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 10 a.m. to noon Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.